Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.
Hello and welcome to Nirmal, ladies and gentlemen. I'm Hiral Dadia. We have with us Sunil Kewalramani, Chief Investment Officer and Chief Research Strategist at Global Money Investors, joining in. Welcome to the show, Sunil. A pleasure to speak to you as well after a really long time. I hope everyone is safe around you and your colleagues as well.
Thanks, Hiral. Nice to see you again. And nice to see you hale and hearty and happy and cheerful.
Thank you so much, Sunil. Sunil, let's start with what happened in terms of where the equity markets were concerned. The kind of dip that we saw in the month of March, everyone first anticipated that I think things are going to get worse from here on and we're just going to keep going lower. But that's not what happened. After the kind of lows that we hit in the month of March, the kind of recovery that we've seen is also unexpected, with taking into consideration the economic factors, the health factors around our economy, as well as around the global economies as well. What is your reading of this kind of a rally that we've seen right now?
Hiral, in short, I would like to call this as a hope rally. As you know, always markets live on hope. They go up on hope. This entire rally is on the hope that everything will be great and fine. So what happened after March 23rd was, and I had put a note just around that time. But anyway, what really happened after that was just a hope that started coming back, that things will start returning back to normal and things will not be so bad. So as long as the hope is there, this will always be there, as the market always discounts tomorrow.
Mm,
So this will continue till all this. And now we have a round of vaccinations and immunizations to be, going to happen across the world. So hope will be there. And for those who think that, it's all over, like, there could be a big market correction and all that. I mean, the markets will always live on hope. Okay. And that's what will trigger and keep triggering more and more stock sectors to keep going up.
right. But Sunil, what's happened is very rarely do we see an asset class, say in the form of gold and in the form of equity, move up together at the same time. And this is one such crisis where we've seen both the asset classes, which have given out spectacular returns in the last 7 to 8 months. Do you think both of these are seeing a hope rally where at least one asset class is bound to see a correction sooner or later now?
True. So the Federal Reserve in America will try to give more. They have a very loose monetary policy, and now more stimulus is going to come out in the United States. As long as all these things come out, you will see a lower dollar, and all this will lead to a rise in gold because the uncertainty is still not out of the way. So yes, this is a very, and Bitcoin as well. I mean, you're seeing so many classes are all doing well. Cryptocurrencies, so many are all doing well at the same time. Yes, one has to give in, but I believe that as long as the Fed keeps, the loose monetary policy, and new stimulus will come out with the president being sworn in, Biden coming in shortly. That type of thing will keep propelling the gold prices as well. So we'll see. Yes, one of them has to give in, and that's what is going to lead to a very interesting scenario set up for 2021. There are a lot of people you listen to. They say that now the immunizations will happen, say January to March, and everything will return back to normal thereafter.
Hmm.
Okay. The world will be super, and the second half of 2021 will be back to normal perfection, pent up demand, so on and so forth. So there are many factors which are going to come in play as we go forward from here.
Right. So if some asset class has to give in, I'm sure that none of us are absolutely sure as to which asset class it is going to be. But where would your bets lie?
Initially, I think equities will do well for some more time, which is the little contrarian thing. Most people think it's about to fall apart. But I believe that sooner or later, equities will also correct.
Mm.
So I don't think this will be a year in which, you'll find just solid one way rise in equities. The economies will return back to normal. There will be a lot of hiccups down the road. And as and when these hiccups happen, there will be, corrections in the market. It's just that, even if you look at it from another perspective, like the behavioral side of investing, as they say that, until everybody and his brother is in the, has come and, started putting his money in the market, till that time the rally will go on. I still feel that everybody has not yet joined the rally. There are still some few people left out. So everybody has to be in.
Right.
Secondly, yeah.
Go on,
So
go on.
yeah, so till that time you will find that the rally will continue till everybody and his brother has just forgotten any other work and they are only looking at a stock market as a way to live their living. Then I think the story starts changing.
Right.
It's a
But
behavioral side of investing, and normally
mm,
not many people think, but if you think at it very seriously, that also has some impact in addition to all these parameters that we consider from time to time.
right. But Sunil, right now the phenomenon that we are seeing is that a lot of FI money that's getting pumped into the equity market that's driving the markets higher. And in contrast to this, you have the mutual funds, the DIIs who are actually booking profits right now. So, would you say that there is comfort in the market even at these levels? Or do you think, at least from the domestic perspective, a lot of people are shying away, watching from the sidelines and booking profits?
There are a lot of people here who are still negative about the market. They think it will crash any day. A
Mm-hmm.
lot of people are that. At the peak of the market, what will happen is that all these so-called bears, right, whatever, they will throw in the towel. They will all become bulls.
Mm.
So you'll have that everybody will say, hey, the market has only one way to go, and that's up. That will be the day when it will top out. Okay. We have done a lot of research as to uh, where we are headed in the next year. We would love to share with you at some time,
Mm.
But I'll also uh, tell you of another phenomenon which I have seen, which is very surprising. But since March, since we discussed, right, after that we saw this big rally. There are a lot of people out of work, out of their jobs, who think that they can make a career out of stock trading. They
Mm.
can just log in and log out and options, and they can play money. They can double every day. What every day? Every few hours. These are the new types of investors I have seen who have come and joined the bandwagon. So, and then there are these discount brokers who have, they are allowing them to trade multiple times with, so that I think all that is going to cause a problem in somewhere down the road. There is these people do not research well the right ways to invest, the right products. There's a value to research, investment research, as you guys do. There's a value to all that, and that is what will reflect eventually when the market corrects. People who think that they can just ad hoc go on investing anything at any point of it will not work. So all these things will have an impact. You will see sooner or later. It's just a question of time.
Right. So what would you make of the current valuations with regards to the Indian market if you have to compare them to other emerging markets?
Well, India has a story of its own. It has got so many things which are
Hmm.
really coming. There's a China substitution story which other countries do not have. There is a lot of encouragement in manufacturing which the government is giving. We are very good in pharma, so we are very good in making all the things which others are not in superior know-how. Also in IT, I mean, these people, after all, with work from home and all, there are a lot of companies I talk to who are enjoying the benefits of working from, oh, they are building the base, they are building the database, they are building the IT infrastructure, the backbone. So after all this is not going to go away also after all this pandemic has come to an end. This will change the way in which people actually live and work. This is going to change, and these changes are there for a long time. So India is going to primarily benefit immensely out of all this. And one has to understand that all this is definitely going to come to play and help the country. So evaluations may be rich in many ways, but the benefits of investing in India are also manifold.
Mm. Right.
The advantage that India has is much more than other countries.
Correct. So, according to you, as you mentioned very correctly right now, that there is going to be a replacement from China kind of demand that could come to India as well in a lot of sectors. Which, according to you, will be sectors that will be beneficiaries of this in India?
The pharma, the specialty chemicals that we have been talking about, they will continue to be the, even in pharma, those who make the APIs, the active pharmaceutical ingredients. I mean, this substitution will go on, and eventually, see, America is also leaning towards India more. Even with the new Biden administration, they have not been very happy as far as the virus is concerned, because this has really impacted their economy also quite drastically. So even after Joe Biden takes over in the month of January, still there will be a leaning towards, India and all that. They'll make things more comfortable. And I think that will benefit eventually these pharma companies, the specialty chemicals and all, which then our prime minister is taking so many steps to assist. So
Mm.
these are the sectors which will be the prime beneficiaries in addition to IT, of course.
Right. And taking these sectors into consideration, Sunil, from a retail perspective, what's happened is someone who's already started investing from March is now thinking whether should be big profits and stay on the sidelines. And someone who missed the bus early is wondering that if the markets are yet to go up, is this the right time to enter? What would your advice be to both these investors?
There is Hiral, there's a lot of value in very good areas as long as the expectations are good.
Mm.
What I am really worried, and this I think will become a trigger point for a big fall. Mind my words, is that people want to double their money every day. They want to invest in options not as a hedging tool, but they want to invest in naked options, in puts and calls ad hoc. They don't know scientifically where the markets are headed. Now, maximum research we people do is in where the markets are headed from here, and you guys do. So they are trying to focus entirely on making doubling the money. If newcomer is coming and he wants to, the only intention is to double the money every day. That's not going to happen. The markets eventually, which look steady, and there's a hope rally going on still, relief rally, hope rally, all that is going to get into trouble sooner or later, when
Mm.
everything is not going to work out to perfection. This is not a plan that has worked out. There is a lot of stress in unemployment, as you see in the US jobs data.
Mm.
Even in India, there's so much unemployment. There are people who do not have any other work. That's why they're only sticking to the screens and trying to invest and in options day in and day out. I'm not saying it's a bad idea per se, but do it sensibly. There is no rationale, there's no research. So they should be leaning on good research from people. From then they can form the basis and invest. It makes sense to invest in any product even today, even in stocks, even in options, but it has to be bound by solid data, fundamentals, research.
Right. And typically, Sunil, what happens is when the market sees a great return, you've always seen it, that it's the mid cap stocks that start catching up. Do you think that the second leg of the rally from here on, if we see it for the next couple of months, will be led by the mid caps and the small caps?
Absolutely. Absolutely. This is going to be the big game in mid caps and small caps, and they're going to run like anything. And now you will see the next frenzy in the market is when these mid caps start doubling every few a week, 10 days, like that. You'll see the people go mad after mid caps and small caps. They will no longer look at the large caps caps and the solitary return of 1 or 2% in a week, they will look at doubling their money every 10 days. Then you will see everybody and his brother is in the market, and voila, that is the setting for a wonderful fall.
Right. And are you expecting a good churn to happen right now in the Indian stock markets? Because what's happened is from March to now, you had the India, the IT companies, the pharmaceutical companies, the specialty chemical companies that actually led the first leg of the rally. Now, do you see that shift happening to other sectors? Because consumption is something which has started to pick up mainly on the back of the GDP, which is improving as well. The recovery that we're seeing is improving. So, are you expecting that churn happen?
Yes, the churn could happen now. Now, what happens is whenever you have these late stages of rally in a
Hmm.
bull market, you find that all the sectors which have not done well at all, they will suddenly start doing well. You may even find something like infra starts doing well. That has not been on the horizon at all. So you're seeing, for example, real estate now. Real estate, you're seeing all these now. Other if you go and ask any real estate developer, it's not that they are able to sell so much. These are very uncertain times. People are There is a little stamp duty cut in Maharashtra, and that has helped. But does that make such? Is that such a big trigger point? Two or three
Hmm.
percent cannot change somebody's decision so massively. I mean, I would not think that that's the way it will happen. But yes, there will be a churn between many different sectors, and whatever is not run, then they will go to that sector. So whatever is sector, just blanket out. If this sector is not done well, money will chase that until everything becomes overvalued. Gold is also overvalued, stocks are also overvalued, cryptocurrency is also overvalued, everything is overvalued.
Right. And then what would you make of the financial names, especially banks and NBFCs? Because they have seen an improvement in profitability despite the COVID led disruption. In fact, if you see the revival that has come in their collections, it's actually lifted the outlook on the overall asset quality of all of these financial names. And if you see the Nifty Financial Services Index, it's gained almost 28% in the last 6 weeks, while the banking index is also not too far behind. Do you think this is something we should look at? Because everyone is of the opinion that in the next 12 to 18 months, that's when we could probably see a burst in terms of bad asset qualities that could be coming out from the financial institutions.
Yeah, many things are going on in this sector. Hiral, is PSU banks. There is We have seen a lot of consolidation take place, and that consolidation many people don't talk about, but that will lead to a lot of cost cutting, and that will be lead to a very high rise in the EBITDA levels. So these banks will be doing very well. PSU banks, which have been not yet caught the bandwagon so far as much as compared to others. As far as the private banks is concerned, they will again, there will be the hope rally, hope trade, which I was telling you. There will be hope that all the economy and all will be back to normal. So private banks will stand to benefit immensely out of that. um, uh, as far as the bad debts is concerned, yes, that's what I'm trying to say, that the economy is, however, not yet performing, and I think there will be disappointment down the road. So right now, this hope rally will go on, but sooner or later, you will have the disappointment of NPAs and a lot of these loans going bust. So, in fact, even the mudra loans, there has been a talk about many of the mudra loans going into, they are not being returned, and there are problems over there. So if the government is trying to do its best, and such loans also start non or rather become non-performing loans, then you're going to see immense stress in the system. So the banking sector, sooner or later, I think, is going to come to face or rather the chicken is going to come to face the roost. So it's going to be a very difficult time thereafter, when all these things, all the support of the RBI, the trying to, all this gets withdrawn. Eventually, they have to withdraw it at some point of time. So a few months down the road, all this, there will be a lot of stress on the banking sector.
Right. And then with this, as you mentioned about gold as well, I think in the month of August was when gold actually hit record high levels. Now, clearly, we've seen somewhat of a downtick that has come in. We've still bounced back of the recent lows. Do you think going ahead, 2021 will also be another good year for gold?
Initially, I think somewhere in Jan, February, we may see the gold go back and hit its old highs,
Mhm.
which was, as you rightly said, in, I think it was August 8th. That was the high for the gold. I would not be surprised if in that time frame it does. Now, this is really surprising because at this point of time, the vaccinations would also be in full force. But sooner or later, I believe that this vaccine is something which is not helpful for the price of gold,
Correct.
because as more and more vaccines get approved by FDA, like Johnson and Johnson, now it's next in line, and you have many more which are there. That every time this news keeps coming out, that may
Mm,
impact the price of gold. Yet, I believe that uncertainties are there, and there will also be a talk of stimulus, because as soon as Joe Biden comes and takes over, he's going to talk about more stimulus and all to revive. Economies are not revived. You see, the unemployment is going up even in the United States. So there will be two contrary forces which will be acting one against the other. And I still believe that if you were to weigh them one against the other, the positive factors for gold overweigh the negative factors at this point of time. But I believe that sooner there will be some point of time you'll be shocked, as you rightly said some time back, that all the asset classes are going up. You'll
mhm.
be shocked, and do mark my words, there'll be a time when all the asset classes will fall together as well.
Correct. And then with this, what do you make of the bond deals as well? Because clearly there was a time, I think in the first week of December itself, the spread between the 1 year and the 10-year bond actually widened by 20 basis points over the last 1 month. And with this, again, liquidity is something that the RBI is also looking to constantly invest. Uh, RBI's latest policy was also something which was really favorable for the bond markets. So, do you think we would see a lot of FI money also that could be invested in the debt market?
Yeah, because the dollar index has been going down. So that's been
Mhm.
another reason why they have been beneficiaries and they have come here. But this FII money, one has to be a little cautious. RBI, by the way, yes, their easy money stance will continue, and they will continue this for some time, because they also know the economy is not in great shape.
Mm,
But I would also caution on the FII front. They have been known to bring in money rather quickly, and they also withdraw very quickly as well. As you know, many times you will find when the tide turns, right, you see very heavy withdrawals as well. So people have forgotten now that FII will ever redeem. They think no, DIs will always keep selling and FIs will keep adding. But there will be a time down the road when you see a very heavy selling that can impact the rupee dollar ratio as well, and that can have a tremendous impact on the once these FII selling starts, that can really knock down the stock prices quite dramatically. So I think one should be careful of that. That I can see sometime in the future that's going to happen.
right. So, overall, right now, given someone has the liquidity, where would you advise that investor to invest in, Sunil?
Everywhere. Well, equity is good as long as you put in sensibly with a good research, not ad hoc, not blindly. I still feel there are pockets of opportunities. If there's good research done, they will be helpful. But don't invest for don't tie in your money for like 3 years or 5 years.
Hmm,
So
hmm,
I personally think that something like mutual funds,
hmm.
or those which have a time horizon of 3 years and 5 years, that's not the right time to invest. Invest from a medium term perspective. Short term, I think, although I do advise from time to time, but I'll be very candid with you. Medium term outlook is good. You can invest many pockets of opportunities, but long term piece one should wait, because I think let this whole correction and all this, be out of it's not happening tomorrow, but when it is out of the way, wonderful opportunities will develop where one can invest for 3 years to 5 years, but not today.
Right. And then with this, a lot of other global events that we have been watching out for. In the month of December, it was initially as to what will the US election outcome be. You have a Brexit, which is a constant overhang already. US China trade tensions is something which is still an ongoing process. Now, with Biden coming in, we don't know where that is supposed to go. Like these, Sunil, over the next probably say 2 to 3 months, what are the key events according to you that we as a market should be watching out for?
Well, I think the Brexit itself, first of all, as you said, of all these now, there are the talks which are still going on between Boris Johnson and these EU people, and I don't know. It's like a touch and go situation. They can suddenly fail this weekend itself, and that can have the. I think it's a very short term trigger. I have been watching very anxiously at this Brexit talks itself.
Hmm.
Secondly, you may find that these coronavirus cases which are there is obviously vaccination starting now or already started in the United States as well. But how much efficacy will be there? Whether there could be some side effects and concerns, that is something which one will have to watch over the next month or two, because
Hmm.
whether these Pfizer vaccine is supposed to be the best of the lot so far, and continues to be efficacious after the second shot, that could be something. You may see a lot of events with many side effects. If that starts happening, then that can also trigger a fall. Plus, I think one very important event which can happen is there is inflation which is lurking in the background across the world. You'll see that the supply side is facing immense amount of inflation. So you find that metal prices are going up, copper, aluminum, all are shooting up like crazy. And partly it has got to do with the fact that because of the lockdown, the supply had got interrupted. Right
Hmm.
now, a lot of the chips and all are whatever is that they are going into 5G. So there is some change of the source from where it is coming and where it is going. Secondly, there is an immense shortage of all these various metals, which is driving all these prices. If this inflation continues unabated, and the Federal Reserve continues with a loose monetary policy, and other banks as well do the same, like Bank of England and the ECB, then you will see massive amounts of inflation. And with that inflation, I think you'll find sooner or later the Federal Reserve may have to step in to to calm down the inflation. And if, as a result of that, if they have to hike the interest rates even a little bit, there you'll see the markets really get it very hard. So I think inflation is lurking and probably going to be the biggest challenge in the next few months.
Right. But do you think, taking the growth into consideration right now, the RBI is in a position to ignore what happens to the inflation?
But right now they have no choice, because of the paramount thing is, firstly they have to the economy is I mean, it's the world economy is on steroids. It's just it's all, they're all in the ICU. So they have to first perk up the economy, bring the patient back up and standing, and then they have to worry about inflation no matter what happens. So there could be a situation of almost something like what we can call stagflation, that the world economy is in a stagnation, but yet there is inflation. So stagflation could become a bigger problem. But right now, no bank in the world, I think, like RBI or any other bank, will try and tinker with the inflation or with the interest rates, right? They just want to prop up the respective economy, just bring them back on the feet and get people to back to work and back in their own wherever they were from. Otherwise they'll be sitting in front of the screens and only doing stock trading, huh?
Right.
Day in and day out, which
Right. And very lastly, Sunil, what would your view be with regards to crude? Because the kind of rally that we saw and then the slump that happened, now again, it's gone beyond $50 per barrel. Do you think this is something crude will be able to maintain, taking into consideration that we're moving into the electric world? So, from a longer term perspective, crude is going to lose its shine.
yeah. I think next 2 months, maybe January, February, you'll still see some more rise. Firstly, because not only this so far again, this, the demand is coming back, and the world is going to be back, the hope rally, the back to that. Secondly, there is winter in the west, so these are the times when the demand is also very high. All these things are going to come together and really help the prices of crude in the next few months. So you'll find again all these three asset classes going up together: the equity, the crude, the metals, and gold and precious metals, and ferrous and non-ferrous and precious metals. And then everything will be all together. And all these things, as you started the conversation with, one of them has to give. There will be some point of time down the road in 2021, will definitely one will have to give. And believe me, once you find one asset class giving up, then you'll find others will also follow suit. They will also fall.
Absolutely. I think that's something which all of us should be embracing. Thank you, Sunil, so much for joining us on the show. It was a pleasure to speak to you after a really long time
Sure.
as well. Great insights. I hope you enjoyed the conversation as well,
Definitely.
and hoping to speak to you soon again. Thank you and stay safe.
Thanks. Stay safe, and thank you very much, Hiral. Thanks.
Thank you.
Take